Welcome, folks. I'm going to do a quick analysis on USDCAD, and the main thing you need to take away from this lesson is basically how to do your 60-day look back, how to define your institutional order flow in that 60-day look back. So I'll try my best to make sure it's short and precise as possible. So the first things first, what you need to do, right, before you even get to the daily chart where you have to do your look back analysis, on the monthly chart, you need to define your profile. You need to define your directional bias. Now, looking at fundamentals currently were affecting USDCAD, right? Number one, interest rate markets. Interest rates from central banks are moving the markets right now. We have seen how dollar has pushed to the upside. We have seen the strength in dollar, right? A strong dollar results in a weak Canadian dollar, right? So fundamentally speaking, USD-CAD is bullish. When USD-CAD is bullish, it means dollar is strong. It also means Canadian dollar is weak. So looking at the 9 to 18 month profile, right? So this is our current monthly candle. Let me just zoom in. This is our current monthly candle. Then I'm going to look back to 18 months, which is this down candle here, right? So this down close candle, this is our 9 to 18 month profile, right? This whole price action, that's our 9 to 18 month profile. That's where you're looking to be hunting for opportunities, right? You're looking to be hunting for opportunities inside that price action. And with us saying that dollar is strong, it means you are going to be hunting for long trades. Long trades from where? From discount arrays, right? So now I'm gonna get rid of this gray shaded area. Now I know that the red line determines the start of my 9 to 18 month profile. Now I'm gonna switch to a line chart, right? Once I switch to a line chart, what's the reason why I'm doing this is so that I highlight my lows and the highs of the range, and also the lows that were created in the range. I'm going to denote them with a dotted line. So this is an interesting low. You can see here, this is a start of a rally. We retraced, we rallied again, we retraced, created this short-term higher low, right? So we've got 1, 2, and 3, right? And to the upside, the most important one is this high. This is the one that has been broken to the upside all the way. Price is moving to 1.3323. So I can basically say that is the draw on liquidity from a line chart point of view. So the dotted line represents the highs and the lows inside my 9 to 18 month range, right? So now once you've done that, you switch back to your candlestick chart. Now take note of where I've marked those highs and the lows. So it's basically this high, this low, and this low, and also ultimately this one. Take note of those levels. So you can clearly see this is our last down close candle, which becomes our bullish order block. You can see our price found support there and rallied, right? This is the second low. Ultimately, this is a huge bullish order block, right? You can clearly see price has been respecting it, and we've got this one also, March close. The March close candle, let me give it a different color shade. right? So these are already the discount areas that are in control of price. So our initial leg higher started right here, May 2021. We rallied, retraced right into optimum trade entry, rallied again. Why am I saying optimum trade entry? Because from this low to this high, you can see this is our optimum trade entry. Then price pushed up right here. This is discount, right? So now we are currently inside, just above these relatively equal highs on the monthly. You can see what I'm doing here. I'm just highlighting my PDRA metrics on the monthly chart before I even go to that daily chart. Now, also, we've got this candle slow just outside of my monthly 9 to 18 month profile. The reason why I'm picking it because it's of importance for us to pick it because there's fair value there. We have fair value. So that's that low and this high of the down candle. Now, right from there, you can already ask yourself what will stop USDCAD from filling up this imbalance. 1, 2, 3, a series of bearish candle with a gap inside. That's market inefficiency. So we can clearly see price is poised to move to the upside. Now, we also have these relatively equal highs, right? We've got these relatively equal highs and price is traded through today. Price is traded through those relatively equal highs where there was buy stops. Now, the other thing you need to understand when you're doing your 60-day look back, monthly PDRA matrix is important in determining your targets. So we can practically say right now, draw on liquidity. Your target on longs on USDCAD is the low on this candle here. Let me just mark it out. So that's 1.380, right? That's the target on your longs. If you are to go long right now on USD CAD, 1.380, 1.30, 1.308. That's your initial target, right? That's your target for longs, right? If you're going long, I don't know how many pips is on offer, but we can just measure it for class purposes. So we've got 92 pips, roughly about 92 pips from current price. So now once you've done that, try to find out if there's any important discount areas that you want to highlight on the monthly chart before you go to the daily chart. Now I'm just going to switch to the weekly chart quickly, and you can now see those relatively equal highs well illustrated, and price has broken to the upside. Now we cannot really classify this as a bullish breaker yet, but if today was Friday, this would have already closed. It was going to close as a bullish breaker, but we are not yet there. So this is our monthly fair value gap, and that's our target for longs, right? If you are to go long right now on USDCAD, you'll be going long with a target of 1.3800. Now, with that said, you can clearly see we're in an uptrend and price is trading to the upside. This is our monthly. Let me go back to the monthly chart again. Right, this is the high of the range. Ultimately, we're looking for price to trade to 1.3323. Now I'm going to go back to the weekly chart. You can see we still have a couple of weeks until we reach that level. It has to be an extreme weakness in CAD for price to reach up there, but gradually we can trade to that target. But these levels here, like these relatively equal highs that have been broken to the upside, they have to provide what? support. When the fair value gap is broken to the upside, it has to provide support for another push to the upside. But that push to the upside must be facilitated by positive news for the dollar. Now, I'm going to go to the daily chart. Now, on this chart now, this is where you need to do your 60-day look back. We already have a discount area marked. That is this level here, 1.2783. This is a discount area. It's an old high that has been broken on the monthly chart. This level here, old bearish order block, broken to the upside, that becomes a discount area. So now I'm going to start my look back period. So today's candle, we need 20 candles first. Sorry guys, I think I'm coming down with the flu. So this green candle here, let me zoom in. This green candle, that's my 20-day look back. So that's my 20-day look back. Now I'm gonna need 40-day. 40 days coming in right here. Inside this also green candle here. And then 60-day look back. 60-day is coming in right inside this bearish candle. Just gonna copy this, and then this becomes 60-day, then this becomes 40 days. So this is my look back period. So that's my 60, that's my 40, that's my 20, right? Now, the most important thing now, which you have to do here, is to highlight your discount areas that are going to provide you with entries to upside, right? Now, let me just zoom in quickly so that we can clearly see. Now, we currently have these relatively equal highs. Remember, we marked these equal highs on the monthly chart. So I'm just going to round them to an institutional price point of 129480. And price is trading above 1.2980. If this daily candle closes above, right, which is highly likely since we've got less than 2 hours left in the market for today, if this candle closes above, it becomes a daily bullish breakout, meaning retracement lower back to 1.29480. Price is likely to find support and rally to the fair value gap on the monthly chart, right? Now, remember, this candle here, when price returns to this level, you need negative news for the Canadian dollar. You need positive news for the dollar for this level to provide support. If none exist, if nothing of that sort exists, then there's no need for you to participate in this asset, right? There'll be no need because you cannot risk your equity where there's no cause or anything to support your theory for hunting for longs on 1.29480. But if it happens that during that time, when price is trading to that level, there's positive news for the dollar, then you expect price to find support. During that time, there's negative news for the Canadian dollar. You expect price to find support. But Vice versa, if it's negative news for the dollar, then that discount array that is coming in the form of an old high, that discount array becomes invalid. See, because price is likely to break and close and continue going to the downside. So now focusing on our 60 days, right? We've got this bullish order block here on the daily charts. Just gonna mark it. It was also broken to the upside, retracement lower, then we're likely to see price push to the upside. We also have this fair value here on daily. That's also another discount array ultimately if price does return to this level. But remember, this is our weekly fair value gap. Then we've got our monthly bullish order block, the gray shaded area. Now I'm going to go to H4. Now on H4, you can clearly see we've got a bullish order block right here. Right now, this is on H4, and can you see how it's linking up with the old high, the relatively old high that was broken to the upside? We've got an H4 bullish order block, and we also have fair value right here. So this will be an area of confluence. You need to have the catalyst in the form of a fundamental to push price to the upside. On H1, we already see how price has found support when it retraced back to this level. Now, if you are scalping, this is where fibs become important. You already have a low and a short-term high created. Retracement, optimum trade entry. There's a discount already that you'd have marked on H4. Trades back into optimum trade entry and rally to the upside. The initial leg move higher was facilitated by negative news for the Canadian dollar that came out around, I think it's 3:30 or something like that. There were negative news in regards to building permits from Canada, and that was the initial move to the upside. So today's close, and then if we start seeing retracement lower, you place your fibs from this low to the high that has been formed. Like for instance, let's say today's this candle close as it is. We grab our fibs, low to high, low to high. You're looking for retracement into discount, right? Discount starting at 1.29364. This level here below your 50%, 62% level, which is an old high that has broken to the upside. You're looking for longs. Looking for longs from where? From those levels that I've highlighted, but only on positive news for the dollar or negative news for the Canadian dollar. So you can see how easy it is to highlight your discount arrays. Once you have your 60-day look back period, you see, already you know this shaded this area here. This is a daily bearish order block that has been violated to the upside. Price cross above, so a retracement lower from this high to this low. This is definitely in discount. Positive news for the dollar, it's going to provide support. Okay? So that's how you have to practice your look back scenarios. I gave guys this as an assignment in class, and Jerome and Tendai did send me their assignments. So the rest, try to look at it from how I have broken down the structure of the 60-day look back period, and try to do the same on your preferred currency pair and send me the chart so that I can evaluate. So ultimately, we are hunting for longs from discount bullish order block. Let me go to the H1. We've got this H1 bullish order block inside the H4 bullish order block. Old highs that have been broken to the upside. Price returns if we get positive news for the dollar, negative news for the Canadian dollar. This old high is going to provide support and price pushes to the upside. So You can go further lower, 30-minute time frame. You define your PDRS. If you're going to scalp, you go further lower on the 30-minute time frame, even 15-minute time frame, so that you get proper, precise entries according to fundamental that has been released. So yeah, this is what I just wanted to show you guys on how to do your 60-day look back period, and in relation to your higher time frame bias that you'd have defined on the monthly chart. So with that, I wish you guys good luck and happy trading. And take note, I'll try to do my best to do these look back examples so that you guys can now get to grips with how you link the two, technicals and fundamentals, plus your order flow that you have defined on the 60-day look back. So yeah, thank you guys for watching. I'll see you again next time. Keep well.